Good morning, good afternoon, good evening. We're looking at May 10th, Friday. Hope you guys had a good week. I know I did. Let's see if we can finish on a high note. All right, let's not try and make a whole week in one day. And so we want to be kind of diligent, right? We don't want to blow it on a Friday. So let's remove this. I think if I remember correctly, there's a couple of speakers, Fed speakers. They may actually be speaking already. Let's turn on the squawk. Okay.
Fed slogan says the strong economy could be a sign of a higher neutral rate, and the economy's resilience is surprising given the high rates.
So we're just going to let this come through, and then we'll be able to get started. So yesterday's plan was to sell any kind of higher high. So if you guys participated in the plan, you made money. Here we are picking up from the lows, and now we're trying to go higher. Looking at the daily chart, we have higher highs, we have higher lows, we have a green candle. We're trying to make higher highs, right? If we look at the size of the candle, we have 25 pips or so. The average should be closer to 56. So we're missing about 3 boxes. Let's figure out, where we're going to add those 3 boxes. I think we're going to add them to the top. Right? So if we go down to an hourly, ooh, look at that. Right? So we're already operating with yesterday's ladder. It's still in play today. Right? Maybe we can just add a couple of rungs. Right? With our mind's eye, we're just lining things up with the left. Ultimately, we remain sellers up here, right? We're still thinking to play a wick on top of a daily candle. All right, so if we can find our way
remaining. I'll lead with University of Michigan sentiment prelim.
If we can find our way up here, we want to be sellers up here, right? Anything above 08, right? We want to sell into. Remember, this is only for Friday, right? We might be bullish come Monday. Oops, sorry. We might be bullish come next week, right? So, but for today, we want to find our way up here and then become sellers up there. Okay, so we want to be buying red candles and wait for this news to come out. All right. Let's wait for the news and then we buy red candles. Ten seconds.
10 seconds. $67.4, 67.4 live, lower than forecast, 76.2. 5-year inflation prelim, 3.1%, 3.1% higher than forecast, 3%. 1-year inflation prelim, 3.5%, 3.5% higher than forecast, 3.2%. Expectations prelim, 66.5, 66.5, lower than forecast, 75. Condition prelim, 68.8, 68.8, lower than forecast, 79.
I have 3 in box number 1 right here.
Seeing some slight downside in S&P 500.
I'm looking to put a 4th click in. If I don't get the 4th, that's okay. All right, I'm buying on the red candle and I'm expecting higher highs over time. All right. Lower than expected. All right. In this upper box, I'm trying to recycle the open trades before I put more in. Right. Click number 4, if I can, will come right around here. There it is. Okay. So I have 4 trades in this box here. I have no trades there. These are just targets. Let's wait this out. right? Look, going back to our ladder, we're looking to go up the ladder from here, right? We want to go up the rungs and then be sellers above '08.
And we have posted the University of Michigan May prelim report on the feed for all those interested.
Right, let's go take a look at our dollar index. Now that the news has come out. Right, so dollar index, we have our measured move. Make sure the measured move brings us to the right spot. I'll put this one back. So we're looking somewhere around 104.30. Somewhere in the middle of this previous range here. All right, so by the time Dixie finds its way here, the euro may find its way, you know, let's go take a look. Daily chart. All right, remember, if the Dixie is falling, the euro tends to go up. All right, so let's take that and put that over here. All right, if we can break outside of this channel, we might be looking at 113, 112. Right? It's not impossible. Right? We'll get there when we get there. One day we may be there. If that fails, then maybe we're going down here, 104.
US dollar index slightly pairs decline after UMich data. Last down 0.02% at 105.2.
So there's a lot of potential here. Here we are, buying off of that level. Now we're trying to go up the ladder. All right, so if I just take this box and I put it here, this was an average move. All right, and so now I'm just looking for an average move back up. If I put this corner on the swing low, I would expect the market to come over there.
Treasury yields edge higher after mixed sentiment survey data.
If it breaks lower, then this is probably going to go here. This is just a measuring device, right? It's not a crystal ball. It's just there to give us a clue as to what the market is capable of doing. I'm just going to shrink this a little bit, bring this like so. Come on, came so close, so close. Right. I have my 4 clicks already, so I don't want to put any more unless I recycle. Right. Let's put up a couple of vertical lines here, just for the record. There's 8. Oops. 8 o'clock. Change this to yellow. And then let's go find 10 o'clock.
Fed's cash price says the Fed is interested in AI because it contributes to productivity.
So there's my couple of hours. Let's see what we can do inside of this. Right? I put the box on that swing high. The market came down just shy of 9 pips. And now it's bouncing off. Oops, I think I changed the box. Yeah, that's all right, good enough. Just want to make sure it's in the right spot. All right. And now we're looking to make our money from this pullback, right? Between the hours, well, between 8 and the bottom of the hour, 8:30, I'm usually building a position in some kind of a retracement, right? So I am expecting some kind of a retracement into 8:30 or so, and then I typically see my trades close after the bottom of the hour. Right? It's a process that involves the time of day. Yesterday we went to the town next door to do some grocery shopping, and on the way back we got stuck at the gates. For those of you that don't know, I live in a national park, and there's a park gate that we have to go through, and there's a park warden there. And last night there was a lineup at the gates. Took almost an hour to go through. Always something going on. There we go. We close our first winner. That's lovely. Red candle. If we can revisit the lows down here like so. I'm reopening that trade. Right, so now I have and still have 4 trades in box number 1. If I go into box number 2, I'm putting 4 more. If I go into box number 3, 4 more. And ultimately, if I must go into box number 4, I put 4 more there also. And all the trades have their own stop losses. And all the trades are going in the same direction, looking for the same outcome. Right? 3 pips, 3 pips, 3 pips. Right? I'm still dealing with trades from days ago. Right? I have a different, I have a bigger picture, bigger box that I'm operating within. Right? Instead of trading 2 hours per day, I'm basically trading 8 hours per day with the same box concept. My box is huge. Right? And within the big box, there's all these little boxes. Right? Bottom, if it gets into here, it opens me up to a few clicks. Right in line with that shelf, that little area here. Right? Our rung on our ladder. Ooh, maybe we should put a rung on our ladder there. Right around here. Oh, there we go. There's one. All right, so I'm buying this little shelf here. Maybe I get to buy more. There it is. There's 2. All right, if it drops a little bit more, maybe I can buy number 3. And then ultimately I'm willing, able, and capable of putting in the 4th trade. Right? 1, 2, 3, 4. All right, so I have plan A is to make money going up. Plan B, C, D, E, and all the way to Z if I have to. Yeah, is basically the next 16 clicks. All right, there it is. Boom. And now I'm saving one last one for the bottom of the box. All right. So looking at the 5-minute scale here, we have our typical friend, the one that shows up at least twice a week, right? Our little outside range buddy. Right? By design, structured to shake the weak hands. Let's extend this across right there. Oh, and lo and behold, that's exactly where we are. Come on, I'd love to put click number 4 at the bottom of the box. It'd be kind of sweet. Finish the day on a positive note. Expectations are that we want to sell from higher. And being today's a Friday, I probably won't get the chance to sell. I might just be getting into a position, but not clicking a trade. And get ready for Monday. Don't blow it all on Friday. That's kind of the idea. I'm observant of the rules today. "15 minutes in, and we have 7 clicks. It won't take long. I'll get to spend click number 8, maybe. And then hopefully we'll get paid from all of that. All right, those of you that were tracking that gold trade that I put out in the chat room yesterday from 23.13, target was 23.72. We made it to the target. And we got it to 23.76, I think. So there's a nice, $50 move at least. Right, click number 4. There it is. I'm jumping the gun. All right, so now I have 8 trades amongst 2 boxes. Right? The goal is a push upward. Well, eventually. Looking at this, there's the potential that we drop another box. All right, what's this level here? 767. I have 762 here. All right, we have room to come down, make a lower low. All right. If Mr. Market is in the mood of, hurting people on a Friday, that's how it'll do it. Go down here, shake away the loose hands or the weak hands. All right. Remember, this is a measured environment, and we're using the box to measure what's underway. right? Our expectations are the same over and over and over, right? We find what we're looking for within 4 boxes. In this case, that might be it right there. And I'm in box number 3, so I'm going to click box number 3 money. That's the first trade that belongs in box number 3. All right, so now if it goes deeper, I have 3 more clicks for this particular box. Yeah, I guess somewhere in there. And then ultimately, the bottom of the box. This probably goes somewhere all the way to the left, way, way, way over here. It probably connects to this here. All right. All right, so, sorry. The trick is we're building.
Taking a look at the Fear and Greed Index, 50 out of 100 equaling neutral, and the Crypto Fear and Greed Index, 66 out of 100 equaling greed. And looking at the VIX, currently up 1.81% at 12.91.
So we're looking at this here. All right. So the way the strategy works never changes. Right? We build a position right now to get paid from the next move, right? So the next move is expected to be a bounce off of support, right? Because the euro is in an uptrend. Right? Oh, if you go to the right time frame, you'll see it. Right, there it is. Right, so we're looking at this, and we're looking to participate in this environment. And we're willing to be sellers up there because we're here for a short amount of time, not a long time, right? We're not here for the trend. Right? So remember, the facts is the next move is where we make our money, not the current move. Anybody that's chasing this because they see red, 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 and it's coming off from a high, they're falling into a trap, right? And the criteria is, if you don't recognize that this is a trap, you may do everything wrong thereafter. Like thinking this is working. Oh, it's falling, let's sell it. And the next thing you know, you're selling at the very, very bottom, just before it turns. So instead of chasing something, we think, when does this will come to an end? Probably near support. And then we build expecting that end is near. Right? So it's an assumption. And the assumption is cheap, 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 right? Micro lots. And eventually you find exactly what you're looking for, and all your assumptions come home, right? They all start to make hay, right? So the problem is when you have stuff like this and you have really, really tight stops and you don't have a second chance for yourself, you're not giving yourself second chances like we have here, 16 chances. If you don't give yourself chances, you put it all on the line with every trade, right? It becomes a, do or die situation. Instead of here, it's almost stressless, right? Because I know eventually I'll find what I'm looking for. If not, then I begin to lose, right? So I'm not losing until I must. And then at that stage, I'll have tried finding a way out before I've lost, right? So it's like I haven't given up on the way. And we can't give up because we have allocated funds to do just this, right? 4 clicks per box on purpose, right? We're willing to do 4 clicks in this box on purpose. Okay, so it's a matter of recognizing that these are normal moves, right? Two, three, 3.5, 4 boxes. These are all averages, and we're just operating within this average environment, expecting average results. Right? This is important. Right? What we see on the intermediate time frame kind of leads the way, right? It tells us what we're about to do. Right? Checking up on the ladder. Right? We've gone down 3 rungs on our ladder. Right? If you remember yesterday, we already suggested 3 to 4 rungs is normal. Right? It's the same here, 3 to 4 boxes. I'm curious to see what comes of this next move. Right? If we look at our dollar index, the dollar index is retracing since this morning's news event, right? But it's basically checking out that level, that breakdown level. All right. Again, this is not financial advice, right? I'm just some dude on the internet showing you how I trade. We're almost at the bottom of the hour, right? That's usually when I would suspect this is near an end. This current move usually comes to a screeching halt at around the bottom of the hour. All right, and then we want to pick that up and we want to watch it make us money on the way back up. All right, so this is a normal market behavior at this time of day. All right. Between 8 and 8:30, I build a position, and then between 8:30 my time, so this is 10:30 New York, and 12 o'clock New York, I tend to get paid out. Right? This is what we did yesterday, and the day before, and the day before, and the day before, and the day before. It's one process repeated over and over and over. And when we're wrong, the logic of this system is it allows you to fix being wrong. You have a hand at fixing things. You do have a hand in the process. You do get to engineer the next move. You can remove some, not all of the losers. You can add to your drawdown or add to your winners, depending on the case. And then it's this engineering, right? It's this shifting the weight from one side of the scale to the opposite side of the scale. You don't have to be all in all the time, right? So what we try to do is spread that risk. So I started with 1 click and I had 15 more, right? I'm down now to only have 2 more clicks. I've spread 13 of them, 14 of them, right? So I don't have unlimited money. I don't have unlimited clicks. I just have to be patient and wait until I go into box number 4 to spend the last clicks that I have access to. And by then, the probability has been laid out, right? By the time I put money in this box, I have followed the plan according to the probabilities. I know this is normal. Right? Gamma, give me one more. I want to put click number 3 right there. And if I can get one more at the bottom of the box, and then finally I'll have last box, right? Look at our outside range. Isn't that beautiful? Right? That's kind of what they do to us once or twice per week. Let's look at it on an hourly scale there for a second. All right. That damages a lot of weaker hands, especially on a Friday. And a lot of guys are looking to capitalize on the weeks of profit, and so they'll tighten up their stops, they'll tighten up their targets, right? Guys want out on Friday, and so the market is not oblivious to this. Right. Right. This is the day you don't want to be getting a speeding ticket, so to speak, right? Don't overspend, don't overclick, make sure your size is right, make sure you're diligent and patient with your entries. And if at all possible, keep break even in your line of sight. In this case, the way we spread our risk this morning, our break even is somewhere in box number 2. My break even is off the mark because of what I've been doing all week. Right. If we operate within that 2-hour window,
Fed's Kashkari says strong US tech sector underpins why the US has the world's reserve currency.
if we operate within our 2-hour window, our goals are managed, our expectations are managed, and as such, if something goes awry, we can catch it, before it's too late, right? Box number 5. All right, so I guess there's a Fed speaker on right now. Cash and carry. Cash carry. This one here will have to be on the lookout. An hour and 15 minutes. This guy here. All right. Let's get paid. What did we say yesterday? The best part of waking up was with winners in your cup. Man, oh man. Sorry, I'm also trading on a different platform. There we are. All right, we don't have far to go to get that support we're looking for. Just zoom out, it'd be easier to see. Right around here, let's put a line there. All right, these 2 wicks right here is what I'm looking at. And so if I extend this all the way to the right, we're basically there. Right, that's where we are right now. We are there. 761. So this has a high probability of delivering what we're looking for. given time. Let's see what comes of this. Okay, so those of you following along, you probably have something like 12 trades open or so. So we have the willingness to open 4 more. All our trades have a 3 pip target. All our trades have a 36 pip stop, right? This is referred to as a long tail stop, not a trailing stop. And the long tail is it's a term we use to describe a wick, right? So we're kind of protecting ourselves from a wicking event, from a flash in the pan. And within this space, we engineer what we're looking for. All right. As we go along, as the market moves, each new bar, when we were buying at this level, it's because the assumption is that this is support and the market has the ability to bounce. And the assumption failed, and so we bought a little bit more at the next support. And that failed, and so we bought more. Our assumptions are cheap, right? They're microscopic. Eventually, we find what we're looking for, and preferably it's within 4 boxes, which is normal. A 5th box would be abnormal. And that's why the stop losses are there, right? So we have that willingness to participate in here. Right? We're just looking to make money on 12 trades, maybe 16, we'll see. But that's the end of the day, If we can manage this, go to the beach. Or whatever it is you do when you're not trading. 8:35. So we're past the bottom of the hour. Now we're heading.
Kashkari says current baseline is that strong productivity rates will moderate.
We're heading into the London fix, which takes place in 30 minutes. That's what closed our trades yesterday, right? That specific event is what propelled the volatility into our targets. Yesterday, if we go and check right here, the trades we took here closed as a result of the London fix. And so yesterday we built a position here and got paid there.
Kashkari says the US has a long-term housing supply challenge.
And so today was almost a repeat, right? We built a position between 8 and 8:30. And now we're looking to see if we were right in doing
and
so.
Kashkari says higher RIC will lead to less housing supply in the short term.
All right. Those of you that have been trading since 8 a.m. or since the start of the live session, your break even is in the middle somewhere, right? It's near the center of what we have working here. Work in progress. Right? And we are looking for this. And maybe it comes here, right? Maybe it starts down here. Right? We don't know. We don't know the future. It's just a probability. There's a high probability of a bounce because of the location and how much we have already moved from the recent extreme. All right, so it's a probability assessment, and we're trading a probability, we're not trading some pattern, some shape, some gizmo, some indicator. We're trading a probability because of a sequence of event that's already taken place. All right, so let's see what comes of this. And this is just for our mind and our, no, this is a security blanket. It allows us to spend 4 clicks in our mind before we have to. Right? And so we can kind of like pre-planned where will you click 4 times in this box. Right? If you go to your left far enough, I'm sure you'll find reasons to click in the box. There we are. And so let's just to review the week very briefly. Right, so we started with an inside bar to this big measure bar. We have to assume bullish, so we played bullish. We have to assume bullish. We have to assume bullish. And here's an outside bar, still within the measure. And so we've been bullish. Today is no exception. Right? And ultimately, we have a goal, and even that goal may get surpassed. Right? We intend to see much, much, much higher than this. It's a matter of time. And each day we show up for the same 2-hour slice and we trade the facts. Right? So the facts may be different than this bigger picture. Nonetheless, you are building the bigger picture. And we're doing it, 1 hour at a time, 5 minutes at a time, or 1 minute at a time. We're building the daily candle. Right? There's that outside range that just damaged a lot of people, unexpected. Right? Right there. The market is nobody's friend. Right? It's in the business of taking your money, not giving it to you. If you haven't had a chance to yet, go check out the YouTube channel, check out the videos, like, subscribe, all that good stuff. Typically, I post a video once the trades are closed. And so sometimes it's instantaneous, sometimes it's a day or so later. But, try to be timely. All right, see if we can recycle this trade right around here. All right, so the trade that closed, I put it back on the most recent red candle.
White House economic advisor Brainard says we must end the 2017 tax breaks for the ultra wealthy.
Curious to see what will come of this next. Suspecting this is a low, right? So if I move this over here, and now we would come out of the box somewhere here. If everything is normal and nothing is rushed, it should spend 1 hour in this box. Right? Anything can happen. Maybe we go down in an hour. Looking left, we've only spent like 20 minutes before bouncing. Right, so we have a probability on one side, we have a low probability on the downside, and yet we are ready and prepared and thinking ahead, planning a call to action in here. Right? And in the call to action, spending of the money is in effect lowering the break even. And if it's not lowering it enough, close a couple of losers at the top. Right? And all of a sudden, the break even is achievable. You can get there maybe within a couple of bars. Right? So it's all about getting over the threshold, getting over break even. Right? You have to cross break even to make money. Figure out a way to cross break even. Dollar index is slightly pulling back from that resistance area, so that should give us some bullishness on our euro trades here. All right, we were repelled away from the 08 area. Megaphone. By now, we typically have all the position laid out, right? So it's normal for that first 30 minutes to be spending money and not making a lot of money, right? We tend to be making money thereafter, right? So that's when the recycling starts, after you've laid the trap, right? Now that the trap has been laid, hopefully we don't have to use this, and then we can close some of the opened trades as that time goes by. All right, so looking left, I only have 3. I'm back to support. I'm taking a 4th. If I go into box number 4, I'll take another trade there also. For sake of Fibonacci work, let's just do this. We are now at 38% of that entire move. If we hold, it bodes well for bullishness. If we fail, we're heading to 76. Right around here. 756, 756, 756, right around the middle of that box. Right, so if we fail to bounce here, maybe this is where we're going. Right, it's a lot of maybes. Some of those maybes are actually dead on the money. And we're just trying to figure out which is which. So what I'll do, I'm just gonna put one line at 38. I'll put one line at 50, and then I'll put one line at 61, and then I'll remove the fib. All right, so now I know these are the three fibs that I'm focused on. We can maybe even change the color of the lines just to make them more, noticeable. And this last one is 61. 38, 50, 61. And we want to go back up the ladder. Yeah. We're just telling the wish list out loud. The law of attraction. Let's get paid. I don't think we have anything less on the calendar. I think there's a Fed speaker later on. Yesterday we were trading longs. Long, 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 long. All day yesterday. And the plan was to trade short if you made higher highs right there. So that's the only time you would have been shorting. And even those shorts, 3 pips, 3 pips, 3 pips would have made you money. Right? So yesterday I was trading on the long side. The day before I was trading on the long side. The day before I was trading on the long side. The day before I was trading on the long side. And the first day I was trading on the long side. I've been long all week. And the only suggested short was to short if we make higher highs. Are we going into box number 4? Come on, come on, come on, come on. I'm waiting, I'm looking at the London fix to resolve some of this. All right, so if the fix comes in and volatility increases, maybe it increases to the downside. All right, so this is why my eye is on the clock. I'm really looking for the beginning of this scheduled event. Right, it's an event that takes place every day. Right, we know they're starting the process of looking after closing the bank. So with that comes volatility. We just don't know the direction. And typically it's implied, right? It's a continuation of what's happening. So let's just see where we are in a few minutes with that fix. This right here, holding that 38% is really, it bodes well for our bullishness. Right? The fact that we're not heading towards the 50, that's kind of giving us hope. Yeah, the big that measure bar from earlier in the week, from last Friday, is what we've been trading within for the last 5 days. Yesterday was added confirmation that we kind of were on the right side of the equation, and today is stressing that conviction. Right? So if you look at it in a different light, this might be an opportunity to get in on the cheap for a move that goes higher. Right? That's kind of what we're looking to do, right? We don't want to buy expensive. We want to buy cheap. And usually 3 standard deviations from the peak is like pretty cheap. In this case, it's almost 50% off. Like almost 50% off. All right, so here's box number 4. I'll put 1 click in box number 4. And so now I have 3 more to spend in this box. All right. Remember, the goal is we get paid on the next move. This is not on the way to the South Pole. This is testing for support. And once it finds what it's looking for, we will bounce. Once we find the support we're looking for somewhere in this zone, this euro is going to go back up. Right? And then going back up does not call for a straight shot to the moon. Right? There's a ton of resistance between here and the moon. So everything we have to do is within limits, within 3 to 4 boxes in either direction. Right? By the time this goes into box number 5, you clearly are wrong. Right? This is the part where if you're adamant that you just need a little bit more space, that's when you throw in the hedge, right? It's box number 5 could be considered, the start of hedging. But that's if you're convinced you just need more space, right? If you think box number 5 is the proof that you've been wrong all morning, then don't hedge. Take the loss. Being wrong is something to be admitted. There's nothing wrong with being wrong. Just don't keep digging. Right? That's why we stop. We don't go and replace the shovel. Right? Just because I created a big mess with one shovel, I don't go and replace the shovel to fix the big mess. I use the same system, the same strategy. I use the same shovel to fill in the hole. Right. 3 pips, 3 pips, 3 pips. I get back on the same horse and I just keep riding it the same way. Right. Postponing gratification. That's what all traders do. How much more to go? How much more? We're 3 minutes away from the top of the hour. I'm gonna have to look at my schedule for this summer months for these evening futures trading sessions. The fact that life kind of gets in the way, I'm gonna have to sort something out to do it more predictably. My life has been organized for years to be trading in the morning, and so this trading off the cuff in the evening like this kind of disrupts stuff. I still don't want to give it up though. I'll figure it out. I'll figure something out for you guys. All right, let's see. Do we get to put more money in box number 4? We only have one click in box number 4. All right, let's get paid. Top of the hour is here. It feels like we're, running down the street chasing the ice cream truck, and it finally stopped. Ah, yes. Let's get some ice cream. Recycled trade number 4, or sorry, recycled box number 4, trade number 1. We have to do that in box number 4, right? We don't want to take that money and put it into box number 3, right? We don't want to borrow from Peter to pay Paul. If I get a red candle in this box, I will happily take the trade again. All right, so 4 clicks per box, and I try to not intermingle. I don't want to mix them up. Right. At this point right here, everybody says I'm nuts, right? Because I put all this money on the line. And clearly I've been wrong for the last 30 minutes, or clearly I've been wrong for the last hour. I started here, and here we are at 9 o'clock, 1 hour later.
White House Economic Advisor Brainard says corporate tax rates are too low for the country's fiscal health.
It's fun being wrong and right at the same time. Inflation will remain in the spotlight for a while, eh? Something we'll have to keep an eye on. This policy divergence between Europe and North America is what's moving these markets. And so we're now playing chicken, right? Who's going to lower rates first? We trade the facts, but we have to keep our finger on the pulse, right? We have to listen to the news. We don't trade it, but we do react appropriately. All right, you guys ready to get paid? Let's flip the switch. Curious to see. Okay, somebody did flip the switch. Thank you for listening. All right, let's close these trades so we can be on our way. Let's just go and check out what we've done so far. Go check out yesterday. $23, 19 winners, no losers, all 3-pip trades. So far this week, $230, 182 trades, 6 losers, all trades were 3 pips. All history, $1,700, 1,600 trades, 27 losers, all pips were 3 pips, or all trades were 3 pips. I think we're following a pattern, folks. All right. If you have the capacity to put a trade on, this is a good place for it. I already have my 4 trades in box number 3, so I'm waiting for box number 4 to recycle 1 trade. Sorry, I'm building a position in my other account. There we are. Come on. Just poke into the box for 1 second so I can, quadruple click my way. I might still be totally wrong and this thing goes through the floor. Yeah, and then there's a couple thousand followers all pissed off at me. Right? We're trading probabilities, and the fact that the unknown is really where the fun is. I don't see this as a problem. I see this as a opportunity to learn something new, maybe. Try something new. Try something that you've been wanting to try. What if I do this? And then if it doesn't work, document it in your journal. It's intrinsic memory. You have to get burnt by touching the stove to remember to never touch that stove again. If you don't make mistakes and learn from your mistakes, especially in this environment, you will never learn. And me personally, as a swing trader, I was not getting enough opportunities to learn. And so this, spreading of the risk gives me 40, 50, 60, 70 opportunities per day to learn something new. Don't give up on a good plan just because the market is trying to trick us. Right? A good plan becomes a bad plan if we go here. The dollar index has a lot of room to the downside before it loses its bullish demeanor. And so that opens the door to the euro upside for quite some time. And I think that's why it's trading around this 07, 08 level for so long. It's like a launching pad. And a lot of people that are expecting the euro to weaken as it typically does are about to get hurt. That's my gut feeling. I'm suspecting the euro is basing here at 0750, only to go higher from here. All right, I'm thinking we might see 112, 113, within the next quarter. Yeah, we'll trade the facts as we see them and make our money a couple hours per day as we see fit. Right? There's really no need to reinvent the wheel. Just show up on schedule, figure out which way the wheel is turning, and help it turn. Right? If we do go to the 50% mark, it's in this box. If we go to the 61% level, it's just outside this box. Yeah, 61% is right where the stop losses are. Okay, so we have lots of space here. See what comes next. We either break down into the last of 16 clicks. And ideally, all of that should close by lunchtime, which is right around here. Or that's my lunchtime, right there. This is lunchtime New York. This is my lunchtime. And so we're hoping to be going back up. Ooh, is this our London fix? It would be nice if we saw incoming volatility all at once, like a rush. I'm assuming this is a low, and I'm looking for the market to find its way over here. right? We're assuming one box at a time. That's it. No, we have to come out of this current box. We have to come out of this current environment, no, on one of the three sides, and our behavior will be the same over and over and over, right? So if we come out on the top, we're basically adding to winners, which are already there. If we come out on the side, the right side, we're now looking at time and maybe reconsidering the position that we have. And if we're breaking at the bottom, depending where you are in your money management, you may have 4 more clicks. Right? So it's the same behavior over and over. 1, 2, 3, 4. Right? It's an allowance and it's allocated for this job. I'm willing to spend the money to get the job done. I'm just doing my job. It's not a representation of our, IQ. Anyone can trade. Not everyone should, but anyone can. Right? It is humanly possible. Right, let's turn this puppy on its head. Turn this around. It's like turning a ship in the ocean. All right, we're past the bottom of the hour. We're past the London fix. We're heading into the banker's close. All right, one thing leads to the other, which leads to the other, which leads to the other, and then it's we hand the baton over to the next 8-hour crew, and then it's a repeat. Right, 3 times per day, the same processes are repeated. Come on. Come on, come on, come on, come on, come on. 10 more minutes or so, and you guys will be by yourselves for the weekend. Nice little move here. Right, if you want to recycle the trade, right, that one that closed, I just put it back on that red candle that we have. Now I'm waiting to see if I'll be catching a break. Come on. The bars are shrinking. And we're waiting. Software update. All right, there's a red candle if you get a chance. Almost too good to be true. Depending on where you live and when you started trading, you may be at your goal already, right? You may have met your average, your potential average yield. And so, consider leaving the casino, especially on a Friday. There's another winner. All right, 1, 2, 3, 4, 5 winners so far as a group. I recycled that one right there. One, two, three, four, 5. Let's see if we can get a few more before the end of the recording. So by the end of the day, I'm hoping these bullish trades will have closed and will be positioned to look at selling going into Monday or Sunday night. And it's not selling to the South Pole, but selling back to support. Right? So first we have to break resistance, and then resistance would likely become support next week. Right? So let's see if we can break resistance and then become sellers. Right? Temporary. Everything we do is very, very narrow, right? Couple hours. We're not thinking about buying for the moon. We're not thinking about selling to go to the South Pole, right? It's all about going back to where we were. And maybe a little bit more, new high or new low. Red candle. If you can take a recycle trade here, do so. I have all my trades in the box already. And so now I'm waiting to see if I get to spend here. All right, so I'm gonna let you guys go a couple minutes early. The plan is simple. Don't touch your stop losses. Don't touch your targets. If we happen to breach 08, you want to sell up there, not because it's coming back to the South Pole, but because we want to put a wick on the daily candle. Okay, that's a big if, right? We have to go all the way there. So one box at a time, right? Let what we've built here close, And if you can leave the casino, then leave the casino. Okay? And I'll see you guys on Monday morning. Enjoy yourselves. Trade safe. I'll post the video as soon as these trades are closed. Okay? Enjoy your weekend, everyone.
White House Economic
Thanks for being
Advisor
here.
Brainard says debt ceiling fights have been unproductive.